Hi folks, Ryan Honeyman here from Lift Economy. Many folks have come to us over the last 10 years and asked, how do I get more involved in creating an economy that works for the benefit of all life? They also ask, what skills and experiences do I need to help make this transition? So 3 years ago, we created something called the Next Economy MBA to help address this and similar questions. Lift Economy's Next Economy MBA is an online course that's designed for entrepreneurs, aspiring entrepreneurs, students, recent graduates, employees, and folks who want to learn more about transformational next economy strategies and businesses. Join the growing alumni network of nearly 250 alumni who've gone through this program and learned essential skills and hopefully built lifelong relationships for catalyzing businesses in the emergent and regenerative economy. So we encourage you to check out our course. You can go to lifteconomy.com/MBA. The next course, Cohort 7, starts on September 21st, 2021. So once again, go to www.lifteconomy.com/MBA. And now, on with the show. Welcome to Next Economy Now. The goal of this podcast series is to highlight the leaders who are taking a regenerative, bioregional, equitable, democratic, racially just, and whole systems approach to creating the new economy.
I'm very excited to just dive right in, Marilyn, and thank you for joining us, by the way. I'm really appreciating that you made time for it.
Thanks, Kevin. Thanks for having me.
Of course. And I'd love to just dive right in and just kind of hear kind of your story and your background, how you got into the work that you're doing now.
Thanks. So I am a trained civil and environmental engineer, and I started my career in water resources in Madagascar. So I had left New Jersey for Madagascar to work on water and sanitation projects for the United Nations. And what happened was I was in the south of the country, which is not the lush rainforest of the north, but the drought-prone south. And pretty much we went a few months without stable, reliable electricity.
Wow.
So the local utility, I'll never forget their name, they're called Jirama. They ran out of water for their hydroelectric system. They were bankrupt. And so a solid 3 to 4 months without electricity. And so I saw that a lot of businesses had shut down as a result. So your cyber cafes, your refrigeration companies. And so I shifted my focus to energy from that point on. Went to the UK to do a master's in engineering for sustainable development, which was quite business and industry focused.
Right.
And then entered the nuclear energy industry in France. So shifted from that more traditional civil and environmental engineering perspective to the energy world. Was working at a nuclear plant, a spent fuel recycling plant in rural France. And slowly made my way to corporate R&D, where we were working on a number of technologies in low carbon energy. So we were acquiring offshore wind and concentrated solar power and torrefied fuel pellets for biomass, so on and so forth. And there I realized a lot of our struggles were less on the engineering or technology side and more on the capital side and investment side. So getting the best rates from banks was a challenge, and having them understand the true risk involved in some of these renewable energy technologies was a challenge. And so I started to focus more on that. And I left France to go to China to be a part of this extremely fast-paced environment where I could potentially bring some of those skills and energy and investment to what was happening there. Worked in a lot of different capacities in China, from startups to mergers and acquisitions, kind of cross-border work. And my time in China was cut short, mostly it's the air pollution that's there, ironically. There to solve the problem and then was defeated by the problem. And so I left China to come back to the US and started working in the venture space. So there were three things on my mind when I returned to the US. One was sustainability, the other was energy in particular, and the third was investment. And so I found all three when I joined Village Capital to lead their energy and clean tech practice. And I also found all three in the work at Drawdown, which you're very familiar with, Kevin, where I was leading the energy models for the Drawdown initiative. Don't know if your listeners know what Drawdown is, but also happy to explain that.
They might. We've had Paul on the Next Economy Now and other, but you would be the only other senior research fellow to have been on our podcast. So maybe we can maybe if you can briefly chat about some of the things that were interesting to you about Drawdown, the general context that the group might have. But I'm curious about the rest of the story too. What's next?
So Drawdown was very appealing because it was extremely international. So a true effort. We had fellows from Nigeria to Trinidad and Tobago working on identifying, quantifying, forecasting the climate change and financial impacts of solutions. So carbon dioxide equivalent and the money involved, so the cost and the savings of these already mature and commercialized solutions. So that was the exciting part there. Afterwards, I left Drawdown, I left Village Capital to join the Hewlett Foundation. And right now I'm leading work on climate and clean energy finance. So that's where I am today.
That's such a great story. I mean, you really have been all over the globe in a number of different contexts. It's an incredible body of experience and really valuable at this time. I'm really curious about what you're tracking around climate finance. What's happening? What's your sense making around what's emergent? What are some of the barriers or opportunities? I know there's a tremendous amount of curiosity amongst Next Economy Now listeners about what role they could play, or just in general, what you're seeing as what's happening.
Great question. So really it's one thing. I'm following the money. So where it is, who owns it, who manages it, how does it flow, why it's not flowing to climate solutions, and what we can do so that it does flow to these solutions. So it's really that money piece. So it's the capital we need to mobilize to solve climate change, to meet the Paris Agreement by 2050. And it's that impact on carbon dioxide equivalent as well. So I'm tracking pools of capital across 4 markets: the United States, China, India, and the European Union. So most of the biggest emitters, both historically and present day. And these pools of capital tend to exist along a risk spectrum. So starting with venture capital, then private equity, project finance, bank lending, the capital markets, and finally with institutional asset owners and managers such as pension funds and insurance companies.
Right.
And so these different pools of capital, they behave very differently. They have their own set of regulations. So where are the market failures along each, and how can we help address them?
And I bet there is, like, each asset class probably has its own kind of nuanced culture and the barriers. It's a fantastic challenge. I'm really glad that we have your mind looking at these. I'm curious about if you could share any of kind of the insights that you maybe collected over the years in your work at Village Capital and in this inquiry in these 4 markets now across all those asset classes. What's jumping out for you? What are some of the insights that have been surprising to you that you think are part of the story that hasn't been heard as much as it could be?
So definitely my time at Village Capital, and that bleeds into today, has made me more aware of not only the lack of capital for environmental solutions, but how the social aspects of that, when layered on, is only worse. So as an example, less than 5% of venture capital in the United States goes to women-led startups. So while women are half of the population and an increasing part of engineering graduates and all parts of the economy, less than 5% of VC going to women-led startups is pretty astonishing. And when you begin to add any kind of color to that, it's really closer to 0%, which is even more astonishing. So the companies run by men get more than 16 times more funding than companies run by women in the United States. And that's what kind of motivated me to start this monthly Green Biz column called The Innovators, which highlights these women-led startups that are solving pressing challenges in the economy through green solutions or sustainable solutions.
Very, very cool. Can you just, I don't want to interrupt, but I'm curious if,
no.
Can you tell me more about that? Because I think our listeners would be very excited to learn more. Is there a way that listeners might be able to participate or join or that's a very interesting project? So
that is, well, you can join by kind of sending me or more column or article features of women-led startups that you know about. If you are in the investment space, you can add a gender lens investment thesis to your overall investment thesis. We have all the data we need to show that this makes good business sense, return on equity is higher, the more diverse the team, including gender diversity. So we have the data we need to make this happen. It's up to us to incorporate that lens into our investment decisions. The everyday listener that's not involved necessarily in the investment pipeline can also lend their voice, help serve on boards and promote women and encourage women to also serve on boards and nominate women to serve on boards of companies, because that tends to also change the dynamics of who gets funding. And there's a number of, I think, more retail shops that are emerging that offer that gender lens in addition to the climate tech lens that we could probably talk about a little bit later when we get to some of the sustainable retail banking work that I'm looking at. But definitely everyone can play a role there.
Thank you. Yeah, those are great entry points. Any other insights that the social piece is definitely, I mean, it should be embarrassing to all of us, the inequity in terms of capital flows. And again, there's this abundance of data that's out there, and I definitely support that observation and huge opportunities. Any other insights, either from the Village Cap work or some of the work you're doing now, that you think are important to share and for people to understand?
Yes, there's another one that I would like to share, and that is just how much energy efficiency has been overlooked. Especially the transportation of goods movement. As the grid becomes more decarbonized, meaning we have more and more renewable energy in our electricity mix, the greenhouse gas emissions from transportation represent a bigger and bigger share of our overall emissions. And so energy efficiency alone in the United States, for example, has been the most important part of shaping the decline in U.S. emissions since the 1973 oil crisis, than all of the supply options put together. So it's extremely important to recognize the role that plays, and that the role that could and should play in the future, especially in the transportation sector, which is globally huge at $5 trillion in 2017. And not just our personal mobility, but also the mobility of our goods and services involved. And so that has been overlooked, and I think that has to also be a part when we think about transitioning to a low carbon economy. It's not only the supply side, also the efficiency side that will help get us there.
Most definitely. Yeah, we need to look at the demand side and prioritize. There's a tremendous number of opportunities, both on the diversified renewables and on the demand and the efficiencies. Well, what and besides the insights, and those are really valuable, and this might correlate with what are some of the things that are you excited about with the work you're doing now, or just in terms of your observations about what's going on? What are you getting excited about in the field?
So I'll give you my top three. The first is this FinTech or financial technology climate change nexus, which is this link between new financial innovations that leverage technology, including software technology, online platforms, and putting those innovations to use for the climate. So one example of that is a company called PensionBee in the United Kingdom. They have this online platform and app that combines all of the old pensions into one new online plan for pension savers in the UK. And you can choose a low carbon filter. So now, the money that's available in these institutional investments are often, it's our money, it's our everyday savings that we've acquired over time, and we've let this money manager take control of it, and we don't have a good view on it. And so they're bringing that traditionally hands-off, very out of sight, out of mind pool of capital to the consumer, so that you can not only have the convenience of managing all these different pensions you might have from working at different companies over your career, but you can also add this filter with your values of supporting the green economy. So that's an example of that. And that's why I'm excited about that one. Yeah. And the FinTech Climate Change Nexus. The second would be, I guess, the capital for climate tech, and this trend to move beyond just energy and solving climate change. And it's some of the work that we did at Drawdown, but having it be more inclusive and understanding that to really solve climate change is much bigger than just the energy sector, but it includes ag tech, building tech, transportation and mobility. And that's really exciting that people are beginning to see the linkages between climate change in their diet is really important, and the capital that's flowing into that is also important. So that also really excites me. And finally, it's a sustainable retail banking piece. So this may not be new, but it sometimes is new for certain audiences. There's a lot of capital out there sitting around in our bank deposits. So there's about 12 trillion US dollars in the United States in our bank deposits.
That's just
the European Union
just retail deposits of
yes.
Got it.
That's our households, our small businesses. It's really astonishing. There's a Clean Trillion campaign, which focuses on the $1 trillion we need globally and annually in power-related emissions, but mobilizing that has become a part of a lot of strategies and in terms of solving climate change. Well, if we take 1/12 of the U.S. deposits, we get there. The European Union also has 12 trillion. China has 24 trillion. India has 1 trillion. So a significant amount, so that if we could impact even 10% of that, that is material to getting us to the goal. And so I'm extremely excited about this retail banking piece. And that's why I actually issued an open call request for proposals to gather the ideas and fund the ideas that will help mobilize capital through that sector.
And I know, in some of the circles that we're in, there's B Corp banks, like locally here in the Bay Area, New Resource Bank, I guess, which just recently got acquired by Amalgamated, that have focused on renewables or solar in particular as part of their lending portfolio. But are other banks, how is the movement evolving from your perspective? Are there barriers, and kind of what's the nature of the barriers or the opportunities as you see them?
So the biggest problem I see is that the banks are not big enough, and so they can't have enough impact. And so we have to get these banks to be more globally available and to be much bigger. There is the GABV, the Global Alliance for Banking on Value. So for your global listeners, if you're in the Netherlands, you have Triodos Bank. So depending on where you are, there are different sets of sustainable banks that might be available to you. And in the United States, there is a number. So Amalgamated, which is Virtual Bank, which is also experiencing double-digit growth in terms of the virtual banking sector. There's also credit unions. So I'm happy to announce that we're supporting the Clean Energy Credit Union, which is federally chartered, that has a mandate to lend 100% for the clean energy economy. So they're providing loans for electric vehicles, for solar storage systems, energy efficiency systems. And so if you bank with them or just simply open an account with them, whether it's a savings, checking, or certificate of deposit or CD, directly supporting not only yourself in terms of getting your banking done and what you need financially, but also the lending for the clean energy economy and to help solve climate change. So it's a growing movement. There are a number of options available. We need to get them bigger, so we need people to open up those bank accounts.
Yeah, we actually just need to move deposits is the basic story. So there's anybody listening could potentially take action there, just wherever they might be having some savings or deposits, just looking at some of the options that are already available and scaling them up.
Exactly. Absolutely. So it's literally I think the minimum is $5. So it's a pretty low barrier to doing something very concrete and very impactful.
Yeah, and that one that's a really good accessible solution or opportunity. What are some of the big challenges in climate finance or clean tech that we might not have addressed already that are really like frustrating or intractable, or some of the problems that you just love, you wave a magic wand and they're solved, or are there any that come to mind that are part of the story that should be told?
There are tons of areas, and they really depend on which economy we focus on. So, for example, there's a lack of what we call non-recourse project finance in China. And this is the financing where you can finance a project based on future cash flows of that project, as opposed to the balance sheet of the company.
Right.
So if you're a new company, you may not have the project pipeline or the balance sheet in case a new project goes wrong. You don't have that to fall back on, but you are the most nimble, the best at what you do to develop these renewable energy projects, as an example. So there's no facility that you can go to get that financing. And so that's a huge gap for that market in China. There are multiple valley of death problems throughout the world, including the United States and China, around moving along not only the commercialization, but just the growth and scale trajectory needed to solve these problems. So a lot of startups may have a gap in the early days around just getting the R&D and commercialization part. And then there's a later gap in moving out of that phase into the market. And then there's a gap between early stage capital, private capital that sees the growth plan and the bigger capital available. So there are all of these mini or micro valley of death that need to be addressed when it comes to especially hardware, capital, more capital intensive, but yet scalable and nimble solutions. There, within the retail banking part, there is just the lack of awareness and education and of consumers that they can take charge of their money and align their money with their values around the environment, environmental protection and social equity. And that's a challenge. There's also challenges around private equity. There's 1.7 trillion out there in dry powder in private equity. It's just money sitting around that doesn't know where to go. And so there's tons of places it can go with climate solutions. On the institutional investor side, things tend to need to be bundled in a much bigger level. So 100 to million, if not $1 billion plus level. And some of these solutions aren't bundled or available at that scale. So both getting the projects bundled at the scale, but also bringing down the institutional investors to the scale where they are kind of needs to happen to help solve that issue. So it really depends on the economy and what pool of capital you're referring to, but there are these barriers out there. The good news is that there are also solutions to all of them.
Yeah, it sounds like it. Like all of those are barriers, but none of them seem particularly intractable. I mean, some of it is cultural and adjusting norms on bite size, and maybe that has to do with transaction costs or return expectations, or it's simply like awareness and communication problems, which those exist all over a number of fields related to climate change. But in the climate finance space, it seems like there are these opportunities. We just need to scale some of the work that's already happening. I guess maybe that is a question. You've named some already, but are there any other projects that are inspiring you today that you're watching and just excited, that just are inspiring to you, that stand out?
So one of the challenges I've seen, or kind of clean tech issues that frustrate me, are around kind of the EV charging and EV chicken and egg problem of rolling out massive charging infrastructure So I was really encouraged to see the recent announcement with the Shenzhen government in China around converting all of their taxis to electric vehicles in the short term. So that was encouraging and exciting. So I am excited about these various rollouts, announcements, policy mechanisms, and financing schemes that support that worldwide. I think we need to increase that rapidly and transform the mobility sector to be electric. I'm also interested I follow quite closely what's happening in aviation in terms of electric airplanes and that potential as well, and also goods movement in general. And I'm also excited, despite all of the challenges I mentioned, I'm excited about the progress that's been made. And we have been able to revert, from a 5-degree future to at least a 3-degree future. And now we need to get ourselves down to 1.5 or 2-degree future. So there has been progress, and we need to accelerate that.
Love that. I'm curious if you can share a little bit about any additional detail about your role at Hewlett. It sounds like you described what you're tracking and the markets you're looking in, and kind of the general asset classes you're examining. But are you are you managing part of the program, or is there a climate finance group? I'm just kind of curious how it fits in what Hewlett's overall areas of focus are.
Yeah, so Hewlett has made a $600 million US commitment to help solve climate change for 5 years. So I'm a part of that $120 million per year effort to help do that. And so within our climate initiative, we have a climate and clean energy finance portfolio, and that's what I lead. So we're an entire team that focuses on climate in general, and I guess I'm the person that has carved out the finance part, and the goal of that portfolio, which is new to the foundation, is really to mobilize or help mobilize this capital we need. And so the two biggest, I would say, KPIs or key performance indicators are CO2 equivalent and capital, so the money that we're mobilizing. And we're looking at, of course, mobilizing capital towards the solutions, scaling back or reducing the capital that's going towards activities that exacerbate climate change, and creating the systems level change needed to enable the first two to happen. So looking at all of those pools of all of those pools of capital across the 4 economies that I was mentioning, the United States, China, India, and the European Union, with other multilateral work. So looking at both public and private finance.
Right, public and private. That's encouraging. That's a huge commitment, and I'm excited that you're part of that team and part of that initiative. The listeners who are listening to this podcast might see the links that will be associated with this episode, and in those links, I'll put a link to a book. Some people might not know that you wrote. You're an author of a book called Sustainability at Work. I'm wondering if maybe you want to just share just a little bit about that body of work. And I'm curious if you're doing any writing these days.
Yeah, so Sustainability at Work, Careers That Make a Difference, is all about how everyone can integrate sustainability into their careers and their everyday jobs. So it's not about greening the workplace. So it's not about, printing double-sided or using reusable mugs in the office. It's really about the work you do and those goals, those paths, and your impact on the environment and society and future generations and the economy. So what I call the quadruple bottom line, those 4 things. And so it is broken down by field. So everything from media entertainment to healthcare, to agriculture, to science and tech. There's something in there for everyone, so that they can really have tangible examples of stories of professionals that have found both purpose and profit through this strategy of incorporating sustainability into their career. And I'm writing these days mostly as a column on Green Biz, which is supported by the E2 Fellowship, which is part of NRDC. And that has been just wonderful. Really highlighting the stories of women founders and entrepreneurs that are going in, day out to help solve these huge challenges, from food waste to in-stream hydropower and scaling all of it. So check that column out as well. So that's where I'm spending most of my time these days in terms of my writing, but maybe I should think of something a bit bigger and more long-term. I'll let you know, Kevin.
You let me know. I mean, I'd be curious. With your experience is definitely rare and maybe unique. The background in civil engineering and the global perspective, and kind of the comprehensive nature of your work, it's not at all common. So you have a lot to share. So please do let me know. And in the meantime, I will definitely be checking out that column, and I encourage all Next Economy Now listeners to check it out. Is there anything else you want to share with us, knowing a little bit about who our listeners are, and any last words?
Yes, open an account in a sustainable bank. So if you're a U.S. listener, you have the Clean Energy Credit Union. You probably have your local credit union. You have Amalgamated New Resource, Aspiration, Beneficial State Bank, and I'm maybe forgetting others. But that's the one single thing that you can do that will make a difference.
That's a great, very accessible instruction. I really appreciate that, Marilyn. And thank you so much for your time today. And I look forward to staying in touch and about your next book and everything else.
Next Economy Now is a production of Lift Economy. To listen to all of our episodes, go to lifteconomy.com/podcast. That's LIFT economy.com/podcast. You can also sign up for our monthly newsletter at lifteconomy.com/newsletter. Please also rate and review our podcast on iTunes, Spotify, Stitcher, or wherever you get your podcasts. Thanks for listening.